It's no surprise that housing markets around the U.S. seem to be in a bit of a housing crash, with record home delistings, cold mortgage rates, and high home prices. But according to Freddie Mac, the interest rate hikes may soon slow down. To make things even more interesting, lumber prices haven't been this low since lockdown. The latest real estate news headlines have left many housing experts shaking their heads at these twists and turns, from Coldwell Banker's CEO being out to nearly 450,000 borrowers now being underwater due to the declining home prices, when Opendoor CEO president are also getting kicked out of their executive team. Plus, Florida AG filing a complaint against MV Realty. Clearly, housing is one wild game of musical chairs, and with such volatile housing news, it's no wonder why real estate podcasts are becoming so popular. After all, robot or artificial intelligence can't match the wit of a human housing analyst. Yeah, what's up, everybody? Welcome to the show. Thank you, everyone, for joining us today. That was an interesting intro, Dan. Good job. It was a little odd, but it was fine. I didn't have that many problems going through it and reading it.
What? I didn't write that.
You didn't write that intro?
I didn't write that intro. I didn't send that to you.
I didn't write that intro either.
Who wrote it?
My friends, that was all artificial intelligence, believe it or not. I'm not even playing. That was 100% artificial intelligence from start to finish. Not only is the description and intro written by artificial intelligence, but so too is the thumbnail. The thumbnail is designed all by artificial intelligence. Everybody's been seeing, what is it, Lenza AI or whatever, all over the place.
Something, yeah.
We went all into the artificial intelligence. So welcome, everybody. Thanks for joining us. We're broadcasting in 4 different places. One of them is YouTube, and Matt LaMarche was first this week. Thanks, Matt, for joining us there.
Okay, we got to address this. Let me address this real quick, because there was a little bit of confusion. So I'm going to come back to it, but Mike V at 9:57 a.m. says, "Where's Malarsh?" Now, if you scroll back up at 6:47 a.m., now that's time stamped for me, so that would mean it was 8:47.
8:47 a.m. Yeah.
6:47 a.m. for me when we posted the show. That was everyone can hop on and get live. Matt commented, so he commented.
Yeah, he was already there.
6:47 a.m., which is 9:47 a.m. his time, right?
No. Yeah. That's right. 9:47.
Yeah. So 6:47 a.m. my time, and then you have Olivier's second comment that felt bad. He wanted to give Matt a chance to be first again, but there was no chance for everyone else. He commented 3.5 hours before everyone else. So Matt,
so early.
Nice one.
Now we have to also give props to ourselves, because the only way Matt could comment that early is if we actually got the show ready in time, which we did. So we actually had most of the show done yesterday. We added a couple of news stories today. So hopefully we'll be doing that from now on, but it was a fun one to do. I'm going to go back to this artificial intelligence, because this is everywhere. Well, first I want to tell you, if you're watching us on YouTube, you can comment. We could display your comment. We could talk about you, or we could talk about your comment as well. So that's what we do. There's Mike V there, and then Matt, Krista, what's up? She's like in the Jasper. There's so this artificial intelligence is everywhere. We've been talking about bots. Some of you are watching this show because my bot on Instagram told you to watch this show through ManyChat. And then we have the Lenza app, which I've got several of these, but these are the main ones that we chose because they kind of went together like some kind of spacesuit guys. Yeah. And it picked up on my headphones on the things that we uploaded, which is just like our logo, which is in the top right of that there. So pretty wild. Matt, if one of the moderators, I always say Matt, but if one of the moderators could share the link in Clubhouse, that way the folks there can see the picture, that'd be cool too. Sure, if you are following us along in Clubhouse, go to the very top of the room. There's a little greenhouse that says Real Estate Networking. Be sure you're a member of that club and following some of these wonderful moderators up here so that you get alerted whenever we go live, just like this. Your face looks squished. You kind of look like Jack Black in that one.
A little bit Jack Black in that one. For Clubhouse, I'm showing my I got 50 of these AI generated things. Ray just messaged me yesterday and said, "Do this." I'm like, "Okay, I'll do this."
So he got 50 of them. I went the 200 route because I was wanting to make sure that I got ones that we matched so I could use them for our thumbnail today.
Yeah.
And of the 200, like, you sent me all of your 50. And I think
just sent, from the app, I just shared all 50.
And probably half of them are pretty good.
There's
different
I'm
art
stoked.
conditions. And so half of them are pretty good.
Yeah.
I have about 5 that are good. And everything else is like distorted and weird. So I got to redo that thing.
Ray sent me some. There's some good ones in there.
Yeah. I've got one, and I'm anxious to hear if anybody else had this experience. But I've got one that's completely inappropriate. And I'm not sending it. Everyone's like, oh, send it to me. I want to see it. No, I'm not going to send it to you. It's completely inappropriate. And the reason why I'm not going to send it to you is because you'll be so amazed at how inappropriate it is that you want to save it or screenshot it. And then you'll want to show someone else it. All the while there's my face on it. So I'm not going to do that. But
and these AI things, I mean, my face in 2/3 of them looks exactly like me.
Yeah.
There's and I don't know if the one you're talking about, Ray, you sent me, but the ones you sent me, they were good.
Yeah, Krista said she wrote me so if you send me, on Instagram, if you follow me on Instagram, which is Ray Zorback, RayZorback, all these bots and the artificial intelligence have some big pluses and big negatives. The big pluses of this stuff is like you can create some art pretty quick. The big negative is it may be wildly inappropriate or weird.
Right.
Well, Krista yesterday messaged me something and used the word mastermind, and it put her back through the ManyChat mastermind funnel. So I had it at first where you have to say only the word and exactly the word mastermind. And there are so many people that don't follow those instructions that it's just worth it just to say, well, while we're talking about this, I'm just going to make it lackadaisical, but I definitely now need to turn it off and have where it's only set for the word mastermind. So,
and now,
pro
Ray,
tip,
why don't you give everyone a little insight why we went this route this week?
I don't know, actually. Well, why did we do?
Well, because are we in an actual housing crash or recession? Or is it artificial?
Yeah. The show title. Yeah.
The show title, or is it just unintelligent journalists, we'll call them, that are doing this for clickbait and headlines?
Yeah, that's really what we were looking at. There's a lot of talk out there about how we're headed straight for a crash. We're going to talk a lot about that today. We'll talk about what's happening in the economy. And a big question I have for all real estate professionals as you're joining, if you're watching this in the replay or whatnot, drop below if you think we are having a crash. Put it in the comments. What are your thoughts? Are we headed to a recession? Is it a correction? Where are we going? Because I feel like there's a lot of the talking heads and pundits out there that are getting a little carried away with the mode, and we called it an unintelligent analysis. So it's an artificial crash due to an unintelligent analysis.
But it's artificial unintelligence.
That's right. That's right.
The opposite of where all the interwebs are going.
Well, thanks for bearing with our AI bot. Dan, before we get into the show, will you tell people what this thing's actually all about?
You know what, I'd love to. When I met Ray here on the interwebs, we were before AI was
long before AI was a thing.
We were trolling other agents in a very popular Facebook group, which was just some of the best times ever. It was so good. We would always end up kind of on the same sub thread and go,
yes,
with similar vibes and similar trolling styles, which is a very rare trolling style. A lot of people want their trolls to be known. We don't necessarily want them to be known. We want you 5 years from now to go, dude, Ray was trolling me this whole time.
As a matter of fact, you may discover in another couple of years that this entire show is just
it's just a giant ruse. We're coming out here, give you real headlines. With our actual points of view aren't anything like this. It's a little bit like the Colbert Report. Remember how farcical that was? Yeah. So this is the longest troll in the history of real estate news podcasts. But I digress. When I met Ray, I obviously noticed that he's a beautifully bearded man, but I noticed something else really interesting about him.
What's that, Dan?
And I'm going to get you with this one today, Ray.
Okay. He
has never done his own stained glass. Not once. He's never created a stained glass piece. Not once.
I actually have. My grandmother had these little stained glass things that she would hang, these little art things that she would put on a stopper and put. And so I've made several of those actually in my lifetime. So yeah, I've done my own.
I'm staring at. I have a lamp, a homemade one by my grandfather. He made a ton of these things.
Yeah.
He made the ones you're talking about that would hang, on the little chain. Mm-hmm. But he made a lot of lamps, and they are super legit. So
I love lamp.
I love lamp, and I honestly thought I was going to get you with that one, Ray. But not only did I notice that he's now that I know this, he's made himself some stained glass pieces. I also noticed
weird.
that he loves to, it's such a weird thing to go, and he actually has before. But I noticed that he also loves giving value upfront to not only his clients, but just to humans in general. So the show is about being more as an agent, but also trolling people in real life. sorry, giving value to humans in general.
That's right. And one of the ways that we think you could be more is to know what in the world is going on. So we created this little podcast diving into the headlines so that you guys could find one place where in about an hour-ish, hour and a half-ish, you would have all the headlines from start to finish and know the most important real estate news so that you could better consult with your clients. So without further ado, you ready to get into headlines?
No. Hold on. Okay, yes.
Let's go. All right. So first up, let's talk about mortgage rates because they're seemingly all over the place, but they've dropped again. So we've got three different news stories kind of across some time frames here. So the first one comes to us from Fox Business. Mortgage rates dropping and interest rates hikes could soon slow, says Freddie Mac. It's wild that the robot picked that out and said that was, I basically gave it the articles and it's like picking out, it's amazing. Anyway.
It did really well. There's a couple off things, but overall, if you're not paying attention, it sounded like a legit headline that we wrote.
Yeah. Freddie Mac chief economist Sam Carter, Khater, said in a statement that mortgage rates continue to drop this week as optimism grows around the prospect that the Federal Reserve will slow the pace of rate hikes. Even as rates decrease and house prices soften, economic uncertainty continues to limit homebuyer demand as we enter the last month of the year. It also talked a little bit about the consumer price index, a measure of inflation, increased 7.7% annually in October. That was a drop from 8.2% increase in September. However, it's still near the 9.1% high. The other CNET mortgage refinance rates on December 5th, they also slid. So we have, this is our second story from a different, I think 4 days later, talking about mortgage rates still going down. And then another one from Fox Business. This was the December 1st one. This is
I don't know,
the same thing. It just has a good chart.
But I keep seeing these articles over the last, 3-ish weeks where it's like mortgage rates are slipping. They're going down. Slipping sounds like a bad thing, but they're going down. Right. They're settling in a downward fashion. They're, and I keep seeing them. And then the next day I expect to read an article that says, it was all a false floor. Now interest rates have gone back up, but that hasn't happened in the last 3 weeks.
Woo, that word false floor gave me chills. I can remember in 2007 and 8, the false floor. Yeah. People were saying, I'm not going to invest because this is a false bottom. You remember that?
We're at the bottom. Oh, no,
because the bailout.
We're at the bottom. I wasn't even in real estate yet, but I knew what was going on. I mean, I was 50 at the time, so I knew what was going on. I was fully
old man Dan.
Right.
So 30-day mortgage rate trends, you can see here that they're just continuing to go down, which that's the only reason why I want to show this article.
In our contributors thread, Dusty was saying, what was it? Was it the ARM, the adjustable rate mortgages that her lender is quoting in the 5s, like mid 5s, low 5s, I think.
Yeah.
I don't remember exactly, but an adjustable rate out there. Now you have to understand it's going to adjust after 5, 7, or 10 years, but I don't have gotten that answer, by the way. If I do a 7-1 ARM right now, can I refi out of it in 3 years without a penalty?
Whoa, hang on. Sorry. I'm hearing audio from an ad that's just playing in the background on one of these articles. I can't say that.
You have to find the tab.
Okay. So what'd you say? Can you refi after the 7-1 buy down?
Yeah. Like if I do a 7-1 ARM.
Yeah. You can refi at the end of it. Yeah.
No, not at the end of it. Can I refi before the 7 years?
Oh, penalty? I have no idea.
See, I don't know that one.
No clue. Well, some of our lender friends, where's D? Some of our lender friends that are joining the conversation. We need you here. Howard Broadsley, what's up, man? Joining us directly from Israel. Thanks for coming in. Okay, so the other news that we're seeing a lot of, Broke Agent Media covered it, Inman covered it, everyone's covering it, and it's become the new buzzword. You remember buzzword. You remember the buzzword pivot?
Not while I'm drinking. Buzzword.
Yeah, buzzword. You remember the buzzword pivot? That was in Shift. Those were popular.
Right.
What was the inflection point? No, it wasn't inflection point. It was some kind of point we were talking about a couple of weeks ago. Now it is all about the delistings.
Yeah, lots
delistings. So delistings hit a record high as mortgage rates, home prices remain elevated. That's not a great, not a well-written headline, but we're going to go with it. This one's also, so what's interesting about these articles actually is because we are quoting more from Fox Business than ever before, which is interesting. On CNBC, for several weeks now, they've just not had the same news cycle that they normally did. I don't know if some people have taken off or what. But it's really normally we get most of the real estate headlines from CNBC and Inman and the magazine.realtor. And lately it's been a lot from Fox. But our next one comes to us from CNBC, and we have a special guest joining us for that one. So, all right, so let's look at, according to the data, this is a delistings. Home delistings hit record as mortgage rates and home prices. It says home prices remain elevated and mortgage rates, but mortgage rates are going down, which we just covered. Anyway, they're still elevated compared to what they were 2 years ago. Yeah. According to recent data from Redfin, a record of 2% of homes for sale in the West were taken off the market each week on an average during a 12-week period ending in November. That compares with the 1.6% of homes that were delisted during the same period a year earlier. So it's a 0.4% difference.
Right. And
this doesn't sound like does that sound like, am I missing something? Does someone else run different numbers than me?
Well, what's the average at this time of year during Christmas time and during the fall? What is average anyway? For
I mean, they usually do slow down, but if you're comparing it to the previous season, even you would say like, okay, it was 1.6% lower last year. It's 2.2% lower this year. What am I missing? Was it 2% lower? A record of 2% of the homes for sale were taken off the market. That compares with 1.6%
a year ago.
Yeah, and a year ago, stuff was flying off the shelves.
Right.
What am I missing? Why is this a story? Everybody's talking about delisting. Why is this a story? Really? But among the metros tracked by Redfin, Sacramento, California had the highest share of listings. 3.6% that were delisted during the market 12-week period. That's up 1.6% from a year ago.
So I would say the story is a year ago when everything was selling at whatever price you set, and at record paces. So less days on market. I would say the story is a year ago when 2% were being pulled off the market. Like how bad is your house, or how bad did you list the home, or how bad are your photos, or how bad is your pricing strategy where you couldn't sell a home a year ago?
Right.
I would say that's the story, not that it's, the market is completely pivoted.
Well, here's what Florida-based Redfin real estate agent Heather Cruay, Kruayai said.
I've been wondering what she's been thinking, and so this is good. I get to hear.
She said some sellers are having a hard time grasping that we're not in a housing frenzy anymore, and it's tough for them to swallow that they missed the boat on getting high price. I don't argue with her there.
I don't know. I actually just shot a new reel that I'm going to post on my Instagram after the show.
But in order to better define it, would it be more impressive if we said, well, about 0.4% more of sellers are having a hard time grasping? That would not be nearly as sensational, would it?
Well, but out of millions of listings, Ray, that 0.4% is, well, wait, that's still only
still it's based on a percentage, so it's still
only
not
tens of thousands. It's not
right. Right.
But Ray, how am I going to get clicks on my articles if I don't sensationalize nothingness?
Well, I mean, that's a good point.
I mean, if I wrote the headline, if I allowed AI to write the headline, it would write homes delisted at a abnormally usual pace.
That's exactly, I was about to say, well, you could just use an AI picture like we did. That's how to get everybody to read your article.
Yeah.
Okay. Is our special guest ready for the next? I want to make sure he's ready. Okay, good.
I have no idea what's going on, by the way.
So. Dan doesn't know, but we have a special guest for the next article, and I'm just going to jump right into it because I'm super excited about him being here. So I'm going to cover the article first. And, well, I know I'll probably right at the top. I should probably bring him in. Let me show you the article. I'll share the screen here. Share the screen. Okay, so this article, this is one of the CNBC articles. And basically it says mortgage. Oh, you don't see that yet. Hang on. There. Bam.
There it is.
All right. Mortgage demand falls even again as high rates sink further. So mortgage demand continues to go down, but so do rates. So what's going on? You would think that low rates would mean much higher demand, right? That's what we saw the last couple of years. Lower rates are pulling some current homeowners back into the refinance market, but not enough to offset the drop in demand for home buyers. Mortgage application volume fell 1.9% last week compared with the previous week, according to the Mortgage Bankers Association seasonally adjusted index. Applications to refi actually rose 5% for the week, but we're still 86% lower from the same week a year ago. Applications to purchase fell 3% for the week and were 40% lower than the same week a year ago. So purchase activity slowed last week with a drop in conventional purchase applications, partially set off by an increase in the FHA USDA loan applications, said Joel Kahn. He's the MBA economist in a release.
Yeah, he's that guy.
Okay, so let's bring in our special guest here. Again, they're using a real estate sign, which we've kind of talked about. And actually, we happen to have... Hey, Drew, how are you?
Hi, Drew.
Y'all welcome Drew to the show.
Oh, this is so good.
He is the real estate agent featured on the sign in the article. And I shot him a text. You know, I don't know, Dan, if you know this, but for the last several times we've had a real estate agent that's featured on the sign. Yeah. I've shot him a text and said, hey, this is Ray. Is this so-and-so? Drew is the first one to be willing to come on the show. And so welcome to the show, Drew. Tell everybody hi.
Hi, Drew.
Can you hear us? I don't think he can hear us.
I don't know if he can hear us.
He's on. Let me text him.
Because I want to know.
I know.
I want to know how he submitted his picture, or did they just take it and not ask him? Is this bolstering his business at all? I want to know these things.
Are you here, Drew? Are you here yet? Oh, he can't hear anything? Oh, yeah. Okay, it's mic settings. Let me see if I can edit his mic settings. No, I can't.
Is he on his phone or is he on?
He's gonna rejoin.
All right.
Man, it was working fine a second ago.
Yeah, we were just talking to him, and I was like, "Hey, Drew, I don't know why you're here, but now I know. Obviously, if you guys haven't figured it out yet,
here we go.
There we go.
Okay, yeah, we got him. What's up, Drew?
Everyone
can you hear
say hi, dude. Yeah, this is live, folks. Yes, Julie, it is.
So I kind of missed the intro, but
it was a glowing intro talking about how wonderful you were in letting CNBC use your sign. And this has been a long time thing where Dan and I have always talked about this. Like, do you just submit a sign to MSNBC? How do you get your sign on one of these news outlets? And then, there's some follow-ups to that I'll ask you. But first, how did this happen? How did they get your sign on the news, Drew?
I had no clue. So first thing I know this morning, you contact me and say, hey, your sign is in an article. And then I go into the article, and the article is, I'm a realtor, but the article is all about financing. So I would have expected at least the article to be related to real estate. But
that's amazing.
And now, what area are you in, by the way, Drew?
So I'm in Sacramento, California.
Oh, okay.
This sign is actually in an area of East Sac, which is a nice, young, vibrant community.
Is that a current listing?
It is a current listing, correct.
Okay.
Are you excited about the extra publicity that CNBC will get you, or are you just like, man, I don't think this is going to do anything?
You're the latter.
I mean, am I the only person that's contacted you from the sign?
From the sign
today?
Yes. Again, because if anybody looked at interest rate, they'll be like, okay, what does that has to do with the sign?
Oh, Mike V says that you should say as featured on CNBC.
You can put that everywhere now. I mean, it's a no-brainer.
Yeah, it's featured.
Okay, so are you worried now that they have your sign? And by the way, this is an official Getty Images I don't know if you noticed this, but the photographer, so the
They
photographer,
sent this to-
he actually took the photo.
Yeah.
And then you can see here at the bottom, it says,
Right.
David Paul Morris, Bloomberg, Getty Images. So this will forever appear in a Getty Images search now.
Yeah. You're famous.
Yeah. So are you worried now that this is part of stock photography around the world? And this has been my fear, Drew, is if I were to send this is my luck.
I
would see,
give it a thought.
You wouldn't give it a thought until, Drew, somebody says, real estate agent caught it with inappropriate behavior.
Right.
And then they show your sign. And at that point, you are going to, did you hear that? You broke up a little bit. I said, right now you're saying I wouldn't give it a thought until they use this same photo as stock imagery that's in their files that they've purchased. And the headline is going to be real estate agent caught with inappropriate behavior in seller's house. And they're going to have your sign. Then all of a sudden you're going to give it some thoughts. Is this a worry? Is this a concern for you?
Not really, but it's like when you bring it up, you never know where things turned out to be. Surprises come from everywhere, except, I don't know if you noticed the gray hair. I'm at the stage of the whatever happens.
Nice. Well, welcome to the show. Thank you for joining us today.
That's awesome.
You are the second person that can speak Hebrew that's with us, by the way.
Hey.
Howard Harrell. He's also from Israel. So I met him in person a couple of times, actually, and so they're both here. What is the market, back on real estate topics? Because this article was featured as it's talking about mortgage demand falling, even as rates sink further. Is that what you're noticing there locally as well?
So it's kind of funny because all indicators in the market will show that we're still in a seller market, but the market is not. We are in a buyer's market to some degree.
Interesting.
Okay.
The reason I'm saying we're in a buyer's market is because houses now are staying 40 to 60 days on market.
I was going to ask that question. Okay.
So what happens with that is it's not that the buyers are right now still in price shock, but that's going to go in about a year. It's going to go out of memory that we were at 3 and 2.5%. I mean, when I bought my first house in Sacramento, it was at 6.5%. There was not even thought about it. That was the interest rate.
Yeah.
I mean, I've refinanced about 1 million times since then. But
so I guess you're saying it takes some desensitization to the rate.
Correct.
And as that happens, more buyers are coming back.
More buyers will come back. The other part of it is that right now, a lot of people who would have sold to either scale up or scale down don't want to buy a house at the high interest rate until the interest rate stabilize.
Okay.
So most of the properties that I see, and I got several buyers who are looking, is what I call investors' sheds. Investors are selling those properties in order to cash on equity, hoping that if the market does drop, they can pick it up at a lower price.
You know what we're seeing actually is investors selling homes where you are and investing in places where I am, and they're getting a much more higher doesn't make sense. They're getting a higher profit per month.
Right.
But it's going to be a slower appreciation over time.
Right. So cash on cash would be faster versus the appreciation.
Yeah.
So a lot of investors that I do work with in here are pulling out, trying to sell their properties at this point at the high rate. And so that's why we start seeing compromising on prices. So once real sellers go into the market, when I mean like homeowners themselves, they're a little bit more stringent about how much would they be willing to drop the price rate. And that's why we're going to see more of them pull out. I've seen a little bit more of a price drop compared to the seasonal drop, but I can't say it's a major drop. Houses are still being sold.
So you're seeing a price drop, but it's nothing out of the ordinary in your opinion.
We've seen it. Well, we've normally during the season we'll see 5 to 6% price drop. We're about maybe 10%, maybe 12%, but most of those sales, like I said, have so much equity in it that it doesn't make a big difference on it. What we don't see is it's like when I approach.
Uh-oh. He froze for me. Did he freeze for you?
Yeah.
Okay. Well, we'll wait just a second there. All right. If you guys have questions for Drew, drop them in the. Oh, okay, you're back.
Sorry
Drew.
about that.
So you said what we do see is, and then you froze.
Yeah. So what we see is basically when buyers hear that there's another offer on a property, they pull back. They don't want to compete anymore. And I heard it from several realtors and other colleagues that there's no reason to give the power back to the sellers, especially when buyers now can make the request. I mean, 6 months ago when we put an offer, buyers paid everything, inspections, transactions. At this point, I have a couple of transactions in, and sellers are paying for the inspections. Sellers are paying, sometimes not even splitting transaction costs. They're taking all of it because they want to sell.
Interesting. Well, thanks for the market update. Great job getting featured on CNBC today and then on an international podcast, all because of that feature.
Yeah.
I appreciate it, guys.
Does it make it second guess anything about your sign? Are there changes you want to make to it now that you've seen it on a national website?
No, it's kind of funny. I have a meeting today about that property. Investors debating whether to go and rent it again.
Well, there you go. Well, thanks for joining us, man. We really appreciate you taking the time out of the day to give us a little bit of it. So have a good one. And hopefully you'll tune into our show.
I appreciate it. Thank you.
All right, man. See ya.
So
that's cool.
That is so interesting to me. So they don't ask and they just take the picture and post it and they hope you're okay with it. Now, what if the article is, because realtors are increasingly doing more and more of this, like a salacious headline, and then that's your picture. Like, what?
That's what I'm saying.
What did I do? I didn't do anything. I didn't even know they took it.
And you probably can't even get them to take it off because they purchased it from a photographer who took a photo of something in public domain.
So that dude just wanders around and takes pictures of real estate
of signs
and then posts it on Getty Images and gets paid, apparently.
Right.
But yeah, Krista Nielsen, who is in the Silicon area, kind of up by where Drew is, she says he wouldn't know unless someone calls him to be on a live real estate show.
But just goes to show you how many. I figured, like, when somebody, is it just me? Like, if I see a number in a movie, I'm like, I wonder if I called that number.
Oh yeah.
Like I'm always, so if I see a number in stock imagery, I call it because I'm curious. Like
everything is protected now. Everything in movies is now 555 or whatever, right?
Yeah.
But back in the day, there's that song at 8675309.
309.
Right.
Mm-hmm.
So I'm so old that this is before the 555 thing. You could call that number in your area and someone would answer.
That's phenomenal.
Yeah.
Well, there you go. So now we all have Drew's number. You'll put it in your cell phone. He's a good guy.
And now we know that, if you need anyone in Sacramento, now we know that CNBC does not filter what they do and they don't care. They don't care about their agents.
They don't care. Well, one of the things that he was talking about it's switching to a buyer's market. And we've still kind of been talking about as a seller's market, but they are taking hits for sure. He made a comment that they're taking a hit on equity, but they're still so high on the gains that we've had in the last couple of years. They're still making money from it. But apparently that's not the case. Apparently there's 450,000 other borrowers that are still underwater.
Now this,
did I say 450 or 450,000? It's 450,000 borrowers.
We're not doing a story about 450 people. No, it's 450,000. Now we've mentioned this on the show, and I've been super curious about these people the last, year? Not even year yet, 9 months?
Right. And this is on Inman. It says, home price declines leave 450,000 borrowers underwater. 6 out of 10 borrowers who owe more on their mortgages than their homes are worth bought or refinanced their homes in 2022, according to the last Black Knight Mortgage Monitor. Okay. Recent home price declines in many markets left about 450,000 homeowners underwater without doing much to ease affordability issues, according to numbers released Monday by data and analytics provider Black Knight. 6 out of 10 borrowers
I'm prefacing borrowers pretty heavily. 6 out of 10 borrowers who are underwater, meaning they owe more on their mortgages than their homes are worth, bought or refinanced their home in 2022, according to the last Black Knight Monitor. Though the home price correction has slowed, it is still exposed to meaningful pocket of equity risk. While the negative equity rates are far below historical averages. Huh? Do you hear that? It's a clear bifurcation of risk has emerged between mortgage homes and purchased relatively recently versus those bought earlier before COVID-19. So basically they're saying that there's a much higher chance, and there's a good there's a good chart. There's a much higher chance if you bought during the crazy that you now have less equity, which I think that would make sense. So let's screen share it so I can show you the chart. Sorry. It was a live show, folks, as Julie said.
Yeah.
All right. So here's the chart. So green is limited equity. That means they have less than 10% equity. Navy bluish teal. What color is that? It's like a dusty teal.
Aqua.
It means negative equity.
Maybe like a sea foam.
Yeah, like a dusty sea foam.
Negative equity.
That's a negative equity. So on this chart that we're looking at for audio listeners and podcast listeners, from 2000 all the way through 2005, 6, and 7. Now in 2005, 6, and 7, we had a huge ramp in the market, and that huge ramp only led it to about 3% combined of people that had negative equity and limited equity. And then it goes back on down to like nothing for years until 2016, 17, 18, 19, 20, it goes back down. 21, it jumps back up to that 3% number. However, most of them are limited equity with 10%, and just some of them are with the negative equity position there, not nearly like 2006 and 7. And then in 2022,
go ahead. I want to read that, but then come back to this because I want to.
Okay.
I'm not understanding this, but go ahead.
In 2022, there are about 5% of people with negative equity. And then 20%, almost 20%, about 18% of people have less than 10% equity. So they still have equity, but it's less than 10%. Okay, go.
Okay, so the article reads, and this is where Inman, among the 450,000 homes that Black Knight estimates were underwater as of September 30th. So they estimate that they're underwater. And that just straight up means they owe more than it's worth, right? Doesn't that mean underwater?
Yeah.
Okay.
They're upside down in that
250,000 or 56% were owned by borrowers who purchased in 2022. Okay, I understand that. Now it says roughly 5% of homes purchased or refinanced this year are underwater, and another 19% have less than 10% equity. Okay, I see what they're saying. So
yeah,
roughly 5% of all homes, not the 450,000. Okay.
Of homes purchased or refied.
This year. So out of all homes purchased or refied this year, roughly 5% are underwater, and another 19% have less than 10%. Okay, I see it. Okay, good.
Yeah.
I mean,
what? So this is a big deal, right? And this headed to the upcoming crash and the market failure all around us.
Well, no, it's not.
Well, why not? I mean, there's upside down. These people are upside down. There's no possible way they could sell.
Okay, but they still bought the home with the affordable payment, and they still have jobs, right?
I mean, yeah.
Yeah. So
there's also no data on how many of those want to sell.
Well, what if they're just good? Like
they might just be living in their house and not selling for the next. What if
they just bought a house and they're good for the next 30 years?
And only 5% of them even have a negative position, which that's going to flow. That's going to change. That's probably going to go up actually after these last couple of months.
Right.
But interesting that their near-term equity is negative.
And maybe if they had an educated agent that watches our show, maybe they had that conversation. Hey, it's very possible right now that you may dip backwards, but in the long run, if your plan is to stay here for a year, maybe not the best idea to buy right now. But if your plan is to stay here for the next 20 to 30, probably a good shot. You may lose a little in equity, but you're going to gain all that back. And then remember, as they pay their principal and their interest, that gains you equity as well. So,
well, I can't help but think that it's just going to plunge us towards a massive, massive foreclosure as these people who are upside down equity positions can't possibly pay for their home. And who would want to pay for a home that has a negative equity position, Dan? And so I just figured that the delinquency rate, well, it's historic low.
That kind of answers Dusty's questions. They're different answer, but similar topic.
Yeah, totally different question. And that's the interesting part about this article for me, is that this looks terrible. Negative equity position, all this stuff. I mean, that looks terrible.
Right, like where we're leading. This is leading us down a horrible path, right?
Yeah.
Out of these 450,000 homes, these are just the first to fall. The rest are going to fall behind it. Pretty soon it's going to be 900,000 and then 1 million. But then you go to delinquency rates.
Then we look at delinquency rates and see how many people aren't paying their bill. And just, I mean, for context, in 2008, it was up to about 8%. 2010, it was up to about 10.5%. In 2011, it went back down to that 8% range. And now in 2022, it's 2.91%, one of the all-time historic lows on delinquency. Okay.
That's a full-on rebound since the run.
Yeah. And so if you only use this negative equity, limited equity to try to predict a crash, you should know that in 2009 and 10, the number is less than 1% on both of those. In 2006 and 7, it was pretty high. But then 3 years later, it's nothing. When the crash really happened in 2008 and 9, it's almost nothing. So, but if you look at the delinquency rate in those years, it's super high. So we're in a much different situation. And I think that's what a lot of people have been saying for a long time. And I love the comparison of these two charts because you really can see it.
So the crash is happening soon, Ray, is what you're seeing.
Yeah. As I said, we're all going to die.
Right.
You can argue with that because we are. Just, I don't know when.
And I always, every week, I swear I come on here. I'm all right. There's going to be some credibility to the Crash Bros this week. There is. And I come on with new hope every single week, like a newborn baby going peep, peep, like a baby bird, like ready to see all the evidence that's leading us towards this crash. And then we read the articles.
Then we read the articles. I think it's time for another lightning round article, Dan.
Let's go. A new feature here on the show.
New feature, quickie. Lumber prices haven't been this low since lockdown.
Yes.
What's next? Coldwell Banker's Ryan Gorman is out. And no, that was seriously all we're covering. Somebody who just messaged. Is that really? Yeah, lumber prices, building materials are super low. So there you go. CEOs, Coldwell Banker CEO Ryan Gorman is out. You might remember us covering the third quarter numbers and investor calls. And I believe Ryan was one of the CEOs that said, we're going to double down on what we are doing because we believe it's working. Or when I can't remember a major change that he announced on that earnings call. Do you?
No,
they did the rebrand from Realogy to Anywhere, and that he was part of it only because Realogy did it. He's not the head of Realogy. He's the head of Coldwell.
We know why they did it. They had so many people coming after them in lawsuits. They're like, dude, we got to change from, and no one could say Realogy or whatever their name was. And then they changed it to Anywhere
And Realogy is a parent company of Better Homes and Gardens, Century 21, Coldwell Banker. Yeah. What's the other one?
Ones.
Berkshire Hathaway. No, it's not Better Homes and Gardens. It's Berkshire Hathaway. Or is it Better Homes and Gardens?
I think it's both.
Oh, okay.
Yeah.
So this is a parent company of those companies. Wednesday, a statement from Anywhere frames the news as kind of a reorganization in which Coldwell Banker is being brought under the jurisdiction of
Sotheby's.
I don't know. I can't. Yanacone. Yannacone. Yannaccone. Yanacone.
Yeah.
Rather than rather than Yannicone replacing Gorman. So they are kind of under the more closely under the umbrella of Anywhere. She first joined Anywhere in 2015, became the CEO of Anywhere Brands in 2020, when the enterprise was known as Realogy Franchise Group. Gorman first joined Anywhere, previously known as Realogy, in 2004, held the leadership role of strategic development at the company, eventually worked his way up. So yeah, there's I'm looking for a quote. I thought there was a quote on here about why he's leaving. Gorman's departure from the company, which is owned by parent Anywhere, is announced Tuesday afternoon. In a statement from to Inman, Anywhere said that Gorman will transition to the role of strategic advisor, while Sue Yannicone will now oversee Coldwell Banker.
So it's just a restructuring.
Yeah, I mean, he's not out.
No, it's more nonsensical things.
Apparently, Real Deal had the scoop on this one. Okay. Well, he's not the only one that's out. We also had a major door close for Opendoor. Let's see. Opendoor CEO and the president. So that wasn't one person. It's two different people. This one also is on Inman. Opendoor CEO and president out as iBuyer shakes up executive team. This is weeks after it reported losing nearly how much? Do y'all remember how much? Pop quiz, everybody that watches the show often.
Comment down below.
Comment down below. How much? Right now, comment down below and you 3, 2, 1.
$80.
$1 billion in Q3 alone.
No, Ray. 932 million.
That's right. It was like 900.
It wasn't 1 billion. Don't round up.
Everybody's inflating this thing.
Right.
Nearly 1 billion would be accurate.
Right. Nearly 1 billion.
Right. The company announced that Carrie Wheeler, until now was its chief financial officer, has replaced Opendoor founder Eric Wu as the new CEO. Woo. I'm honored to have the opportunity to lead Opendoor as we transform the way we buy and sell real estate, Wheeler said in a statement. They're going to have to transform the way they buy and sell real estate if they actually want to buy and sell it in a way that makes money. We built a solid financial foundation with strong balance sheet and liquidity position that sets us up not just to manage through this current housing cycle, but to emerge stronger with market leadership.
So now, I mean, we said this, like the iBuyer space is never going to take over the regular agent. It's not.
Right. It's competition for investors, not agents.
It's competition for investors, not agents. Now, it may take a spot. Now, this is negating or circumventing what's actually happened in the last 7 to 9 months. But they may take a space where just someone wants convenience. They do. They just want to hit a button. They want to buy a house. Like,
yeah.
I don't know if anyone out there has bought a Tesla, but you do everything through the app. You get approved. You put your down payment down, everything through the app. You show up at Tesla. It takes about 20, 25 minutes. You get your car and you leave. That's about it.
That's nice.
It's fantastic. But, so it may get into our space a little bit, but what we really said is this was really just competition for investors because they're looking to flip the homes. They don't sell it that way. They don't say that we're just a house flipper. They just kind of, lipstick on a pigget and then put it back on the market. But we've always said this isn't going to be any competition. We even said that it's going to be very hard for them to make money. And then throughout the pandemic, I said the word,
Pandy.
We said they're not going to come back from this. And now we're here. There's been so many shakeups and so many, just failings. 932 million. Sorry, let's round it up. Let's call it $1 billion. We have to call that a failure. We have to call that a failure as a shakeup in the market or a disruptor they claim to be, right?
You could theoretically call it a failed business model. There's not very many companies out there that have lost $1 billion and continue to somehow operate.
And it's not their entire business. This is just a facet of it. Like when Zillow shuttered their doors and had more than 20,000 listings they had to offsell. They had to
offload. Yeah.
Offload those things. And now I want to see those numbers. What is Opendoor? What are they offloading? What do they have to sell right now? Because they didn't say they're shuttering their doors. They partnered with Zillow, didn't they?
Yeah.
But it's still just not a business model that's very lucrative. And it's been proven
nobody's been able to make money at it. As a matter of fact, Opendoor was the one that was like, no, we're the ones that are going to make money at it. And they haven't. They're going to have to make some huge changes. If you recall, Anywhere announced huge changes a couple of months ago where they said they were going to be taking more money from the agents Remember that? Because we kind of made fun of them because we make fun of all companies that do that, like change their business model. It's like, oh, the only way to fix our failing business practice is to take more money from the agents, like Homelight and some of these others. Well, that's exactly what they did too. Inman talks about Opendoor and says that they're at an existential crisis, which is kind of what we're saying. It seems like they're just, I mean, how are they going to rescue this thing?
They're just hanging on.
Right. Executive turnover is common, but this is not just executive turnover. They lost $1 billion in a quarter. Though Wu stepping down as CEO has been the headline dominating the news, Opendoor's actual announcement is a bit more complex. Wu isn't leaving the company, but rather stepping into a role of the president of Marketplace.
They're pivoting.
The move will consequently see him at the helm of Opendoor's new exclusives product, which is designed directly to connect buyers and sellers. Exclusive represents a pivot for Opendoor.
There it is.
Everybody loves the pivot. Toward a leaner product that is, at least theoretically, doesn't require vast amounts of cash or employees, probably.
Or employees, yeah. This was,
we're not
always been their plan, though, to be leaner.
Right. We're not firing people because we have an issue. We're firing people because we've pivoted into a more leaner, efficient model.
There we go. They CEO'd their way out of this one, I guess.
CEO words, y'all. CEO words.
I don't know. I just wonder when the American people are going to be tired of this crap where they just, no. That's not happening. No, dude, what you're seeing, all the firings and the reshifting, no. That's not happening. The 932 million, not a big deal. We are streamlining our business to only lose 800 million next year.
Sorry.
I'm like, what?
There's nothing going on here that you should concern yourselves with. Jedi mind tricks.
Yep.
Well, the reason why companies like this have a foothold is because you have a whole bunch of other real estate agents that are doing stuff like 40-year listing agreements.
Oh, this one, Melissa brought this to our attention, right? Wasn't it originally?
Yeah, we talked about this before, and actually Glenda Baker talked about it too. And she was like, "That, I mean, what's wrong? Like, what's the law? What's wrong with it?" Because she was like, "I mean, it sounds brilliant." So, as far as I can recall, what these people were doing is saying, "Okay, Dave, I'm going to sell your house. I'm going to pay you some money. I'll pay you like $1,000 if you sell your house with me over the next 40 years. And we're going to sign an agreement. We're going to call it a homeowner benefit package. And we're going to sign a listing agreement that is for 40 years. Now,
so if I ever want to list it in 40 years,
you owe me money. Yeah. We're going to sell it for you and you'll owe me the money.
But right now you're giving me $1,000.
I'm going to give you money. I'm going to give you $1,000. Yep.
Okay.
Yeah. So all you got to do is take $1,000. There's no obligation to sell.
Right. I don't have to.
But if you sell, you have to use me. Right. Which I'm a great agent. So, hey, that's great. Right.
And I get my $1,000 even though they're going to bury me in this home.
Yeah.
Okay, cool.
Now, what happens if you do decide to sell and you don't use me, Dan?
Well, then I'm going to owe you. I don't know. What does the contract say, Ray?
Well, that is totally not a problem, Dan. You can use anyone in the marketplace. You would just have to pay me also.
Oh, so I have to pay two agents.
Yeah. Apparently, this stuff wasn't well explained. So the defendants offered homeowners $300 to $5,000 in a cash loan alternative as a loan alternative in exchange for an agreement to use the company as an exclusive listing broker. However, after accepting the payment, homeowners discovered that MV Realty files a 40-year lien on the property because they're giving it to you as a loan that requires a paying 3% of the value of the home to MV Realty, regardless of whether the company ever provides a real estate listing service.
Oh, so there you go. So I get my $5,000, but my house is worth 500, so I have to pay them 15 grand to get that lien gone.
Yeah, or just use me to sell your home.
I don't want to sell my house, but I have to pay you 15 grand now that I took the 5. Is that what they're saying?
Yeah,
that's awesome. I mean,
it's sneaky snake. Massachusetts Attorney General told Boston 25 they're aware of their business practices. Couldn't comment further. This one is in Florida. It says Florida is the first of the states to take civil action against the company. I mean, it's an interesting business practice. Probably not. I mean, I don't even have a cancellation in my contract. I spend a whole bunch of money on listings. We do a whole bunch of marketing, and I don't even put a cancellation in there. People think I'm crazy, but we give such great service that there's no reason for you to cancel. And if you did need to cancel for a reason, I'm not going to sue you to get my money. So
Right.
why put something in a contract if I'm not willing to sue to enforce it?
Right.
So that's just that's just me. Um,
That is, So what is the result? Or is this just reporting that it happened?
yeah, they're going after
claims
them.
against
Yeah, we'll have updates. Stay tuned. Stay tuned for updates on MV Realty lawsuit. Will they get their 40-year 3%? Yeah, no.
And it was this isn't
that.
just Florida. This is the only state so far. Remember, I think when we covered it, we said there's got to be lawsuits coming, right? And it's Florida Attorney General is the first one to file this, but they're in other states. They're in. I don't know. I don't remember how many. Is it 5, 6, 10? It's in a lot of states. They're all over the place.
Yeah. Let's see. This is a Boston News that's covering it. The Massachusetts homeowners. Yeah, so they're in Massachusetts. They're in Florida. Florida's the one that's currently taking action. It looks like Boston's about to.
Okay.
And it's on the local news channel, and so they have a video that accompanies it that kind of explains it even more and shows how like they have employees that are saying like, yeah, we were having to call people and go pretty aggressive so that they can meet with an agent, which. It's kind of interesting to hear him talk about it because I'm like, well, that's really not any different from a regular inside sales agent.
Yeah, that's just really
right. I mean, they're like, oh yeah, that we aggressively had to go for an appointment. I'm like, I mean, if somebody heard me on the phone talking to someone handling objections and concerns, they may think that as well. But the person on the other end of the phone doesn't feel that way. They feel like
and also the people prospecting, because wasn't that part of the article where they're like, we didn't know what we were prospecting for. We didn't know what the end result was here.
Yeah, I mean, I think that's a way for them to distance themselves so they can't be brought into this. I think their attorneys have told those employees like, yeah, you need to say you didn't really know what was going on.
I didn't know. I was just told to call these numbers and say, come on in and talk to. See, this is where they could use this. They could use Drew's sign.
See,
he wouldn't even know.
He wouldn't know.
He wouldn't have any idea unless a global news podcast like ours, real estate news podcast like ours, reached out to him.
Speaking of a global news podcast, Dan, is our podcast any good?
Yeah.
Yeah, I think it's okay. But why don't we measure it against Realtor Magazine standard with 7 content ideas for your real estate podcast?
Let's go.
First, let me disclaimer. I got a huge disclaimer out there about this article. If you're thinking about starting a real estate news podcast, I would strongly urge you not to. It's a hard road to toe. And if you're really your sellers and buyers, you're probably not going to get it this way. For me and Dan, this is pretty much a labor of love. And sometimes we get some referrals. We do like seeing the referrals pass through the contributors network and those groups and stuff. And we've seen that happen a couple of times, which is cool. But it's pretty much just a labor of love because there's not a lot of buyers and sellers that call us due to this podcast. Now, if you are a buyer, seller, or an investor listening, I need you to call me now so that I know that you're there.
You can shoot me a text right now. I'll just follow me on Instagram. It's right here, and then I'll help you out. So we've kind of catered this. Well, when we started it, we had ideas what it was going to go towards and who was going to be our audience, but it always kind of steered back towards agents were the one watching. And you know, we tried little things here and there to pull in, you know, the lay people, the non-agents, but it always kind of goes back to. So then we kind of just started going, well, let's get some referrals out of it, and that helps.
Yep.
But
so referrals pay the storage bills. That's about it.
Kind of.
Yeah, kind of. That's true. So here's the standard I want to measure us against. It's just 7 content ideas for your real estate podcast. If you guys have been thinking about doing a podcast, you can actually shoot me a DM on Instagram and just use the word gear. And then you're going to get my full gear list for a podcast, for a studio, for a run and gun shoot. But I thought this was interesting. Let's see, viewed in StreamYard. All right, so 7 content ideas. So hot, make it conversational. Oh, cool. I think we do that. Yeah, it
We'll do
says
that.
say for those listening, don't say that, just say you. I think we say for those listening a lot, actually. Because we'll say for the audio listeners, we'll say for those
audio
on
listeners?
YouTube. You're just supposed to say for you, make it conversational to them. We make it conversational to each other.
Right.
But I don't know. And you guys that are in the, see, I just did it. No, I said you guys.
Yeah.
So you guys that are in the watching live, I want you to chime in.
Yeah.
How are we doing on it? Do you feel a part of this podcast and conversation?
I mean, yeah, they have to. They're all our best friends.
Yeah. So we're supposed to.
Who wrote the article? That's what Matt wants
make
to know.
it conversational.
Thing.
Erica Christopher.
And does she have a really successful real estate podcast?
I have no idea. Howard says he enjoys it. Matt says he feels attacked. Well, so it's still very personal for you. So I think that's a mission accomplished.
Yeah, yeah. We attack you on purpose because we love you.
Yeah. Yeah, we attack you personally, actually. Patrick Ellis says, I feel apart. Oh, we want to bring you in. I'm going to say you a lot, Patrick.
I think
Martin says, I feel like I'm being put on the spot.
You are.
Oh, he didn't mean a part.
A part of us. A part.
He means like a part of the program.
Right.
Okay. Good. Okay. So, all right. So we have to make it conversational.
Okay.
Not
only
doing solo shows. Okay. Well, we're not doing that ever because I don't think we've done one solo show ever.
Nope.
And as a matter of fact, even if it was just me, it wouldn't be a solo show because of all the listeners, all the people joining us on Clubhouse, all the people that are on Facebook, LinkedIn, which we haven't had a chime in from LinkedIn, but if you're still there, whoop, whoop. Okay. Hot. Create an outline or script. Well, we don't really do that.
I mean, there's an outline. We have a basic outline, show intro, the much maligned banter, and then we get into the articles. I mean,
we need somebody to keep points. So I would give us an 8 out of 10. If each one of these is worth 10.
The first one?
I give us an 8 out of 10 on conversational.
I'd
give us a 10 out of 10.
Solo, 10 out of 10.
Not doing solo.
Yeah.
Create an outline or a script. So we do have an outline. The outline is the news articles, right? Key points. And we go through there pretty clean.
It's like
we have a little intro at the beginning. So I would say,
5.
I'd say like a 7. Because there are news shows out there that just like get together and chat about the news and are literally looking it up as they go.
So we're better than that.
I'm not going to name names. Not going to name names. So I'd say 7 out of 10 on that one.
Okay. And then not.
Let's see. It says not going off on tangents. Well, okay. So
that's my entire life. It's my entire livelihood is a tangent.
Yeah.
I'm a tangent.
Matt says I am a walking tangent. He says I'm here for the tangents.
Right.
Krista Nielsen says I feel like I'm in a secret club with 2 bearded dudes. Okay. No, it's good, but I mean, you should tell other people. Don't keep it a secret. Don't keep it a secret.
Don't keep it a secret. Tell everyone about it.
Tell others.
Like, should subscribe.
And how do you know what being in a secret club with 2 bearded dudes feel like?
She feels like. She doesn't know. She feels like.
Oh, okay.
Sorry, okay. Krista, you feel like.
You. Okay, I'm going to
audience.
not share that because that's going to be a lot of text on screen. Okay, so not going off on tangents. No, we definitely go off on tangents. So I'm going to give us a 0 out of 10 on that one. We definitely do that.
But that's the improv part of it. That's the lively banter part of it. And when we bring someone on Clubhouse or live on the show or talk about comments, that's all. It's part of what makes our show us. I mean, I don't know. I like it. But okay, yes, 0 out of 10.
Yeah, somebody says, wait, it's not a secret club? Nope. Matt says I should start a podcast. You should probably just tell people about the one you got more often.
Yeah.
Okay. Use current trends. I think we do that. I think we do that pretty well through thumbnails, through themes.
10 out of 10.
Yeah, 10 out of 10 on current trends.
10. I mean,
definitely
come on.
do that.
Okay.
Why are they talking about real estate today in the Housing Muse and Barbie? I mean, where's our? You should list us. Answer customers' questions. I think we do that.
10 out of 10.
10 out of 10.
I mean, we do it live too. I mean, come on.
Right.
Okay.
Get inspired by books, articles, videos, and events. I mean, all we are is inspired by articles.
It's the entirety of the show.
Yeah. So 10 out of 10 on that one.
All right, dude, we're killing it.
Killing it. Bring on a guest. Just today,
Dude,
we had a
10?
special guest star who is featured on CNBC.
Right.
10 out of 10. Create a list. What?
For who?
Studies show that headlines with numbers generate more social shares. Oh, so we should have titled it eight real estate stories about whatever. You know, that's what it's saying.
Okay,
yeah.
I see.
Yeah, we don't use numbers and titles very often, so
Okay.
I would say 0 out of 10 on that one.
Yeah. Okay.
Use holiday themes, 10 out of 10. We definitely do that. We had we dressed up as the same character for Thanksgiving or for Halloween.
Yeah, accidentally on purpose.
Tell a real life story. We do that all the time. We also tell fake life stories, and no one knows the difference.
Make up a whole dude. Remember, this entire show has been one long troll.
Yeah,
I don't even exist. I'm AI.
You just completed the bonus tip, which was tell a secret. So
there you go.
There you go. Just the bonus tip.
We're killing it. So
I would say, I mean, who did the math on that one? I think that's a 10 out of 10 as well. So somebody total it up. Give us what we made out of 1, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 120 possible points. I would love to know our point total.
Yeah.
I think it's somewhere around.
It'd be 90s in the 90s because we got 14. 2 zeros.
Yep. 90. I think it's 96.
Yeah.
So there we are. 96 out of 120. That's actually not that good. I think.
Well, we had 2 straight up zeros. I mean, come on.
80%. That's a B.
And also, well, I would take a B on the podcast because
okay.
Remember, it doesn't say anything about have a glorious beard.
It doesn't.
That would give us those 24 points back. So
it appears that as Matt says, this is a solid B podcast.
Solid B.
Solid B.
Yeah.
So Dan, why don't you tell everybody?
Go on the podcast.
Give us a review.
Give us a review.
Don't say solid B in the review.
Please don't say that.
No, they won't get it. It's out of context. It's not going to make sense.
But as long as you're commenting and share this, go like, subscribe, turn the bell on, do all those things that we're supposed to ask about, and tune in next week for our lists because we're going to do a list headline.
We got to do a list. Actually, you know what? Next week, we'll have to figure that out because I will be in Tennessee next week. So if you guys are in Tennessee, let me know.
We'll
have to figure out how to do a show next week.
Because you're the only 10 I see. Because then the week after that, we're going to do the year wrap. Right?
Yeah. It'll be the prediction show.
Possible week off next week, and I'm going to be reaching out to people to be on the show. But I want to go back because I know we have to call it here. But I want to go back and at the very beginning here, someone asked. Who asked? Let me go. Boopity doopity doop. Where was it? I want to know who said it. They said, "Did you see?" There you go. Matt Lamar said, did you guys see Scap destroy Bayern?
No, I didn't. So I haven't watched that yet. I haven't had time. It's on my watch later list. I'm excited about it. Did you watch it? Was it good?
It's fantastic.
Did he destroy him?
Well, I don't care how it went overall. Yeah, Matt.
What'd
you say, Matt? Go ahead, Matt. Tell us what you thought.
So not only did he have the full support of all the commenters, but unfortunately, anecdotal advice and stories don't really translate to like when you're having a debate, unfortunately.
With a very numbers heavy guy.
I mean, he is an appraiser, so you got to give it to him.
Interesting. So it was just like anecdotal. Like I remember this one time that this happened, and Scap was like, "Well, yeah, there's bad apples." So back on topic.
Back to the numbers.
Exactly.
Yeah, that's good, man. That's fun.
The best thing that I watched was the best part of the entire debate is that he gives us a shout out. So thank you, Scap. But the best thing is that Byron's point is I don't think one person should have the power to ruin a transaction, to tear down an entire transaction. And he goes, Scap goes, well, aren't you just one person on a listing appointment? It's one person's opinion of value when you list the home, isn't it? I mean, it's
That's good. Good debate.
It's just the best thing. So, Scap, where can they find that? It's on YouTube. I don't remember whose channel it was on, but if you want to post that here,
somebody link it up in the comments, and if you're watching later, put it in those comments too, because it's
absolutely fantastic. Now, yeah, it's absolutely fantastic.
You can get on and comment on it. No, I appreciate it. Thanks, Mr. LaMarche, and thanks, guys. No, I appreciate it. It was a lot of fun. I'm glad I got a lot of good info out on the appraiser side and got my jabs in here and there. But you can watch it. It's on his podcast, Broke Agent Media. He called it Agent versus Appraisers, and he's out there spouting off like how I'm going to destroy. I'll teach you all how to destroy an appraiser, and then all the real estate agents are out there on his social media going, yeah, no, apparently you taught us how to get destroyed. It was fun.
That's fun.
It was fun.
You got to do that. If you want to get the views, you got to pump those views. So you have to do it like Sunday.
Yeah.
Oh yeah, we're going to destroy you.
Yeah.
I mean, he's the perfect
and
heel
Byron's
in that.
good. He's really good.
He did a great job. Great job at it.
Fantastic.
No, he really is. He's kind of like the Vince McMahon and like the WWE of real estate, the way he promotes things and puts things out there. But when you're going to do that, you need to kind of back it up.
Now you're slinging. Slinging.
So,
Woo.
This means
right.
shade.
Well, dude, thanks for the
guys.
shout out. I'm going to go back and watch it. Like I said, it's on my watch later list. I've just had some crazy days.
When you watch that, and I gave that little like plug for you guys, you can kind of see their little like smug faces, kind of like ooh, like giving a little ouch, like hey, he's giving a plug here, but man, it worked out so perfect.
That's so cool. Well, good. Well, thanks.
Yeah, they both.
I'm a broke agent contributor, so I write little articles for them every now and then. So it's fine. It's fine. We're there. That's fun. Well, it's a good crew over there. If you guys don't watch that podcast, you check them out. It's a good crew. Eric is the broke agent. He's the one doing all the funny memes and stuff like that. But they actually have some pretty solid content on what you should do with your social media. So I've heard him also speak at a couple of conferences, and it was good stuff. So you should definitely check them out.
At the very end of it was actually kind of cool. Just this last thing here is that they actually offered me an invite to come back on after that debate and maybe do some stuff with them as far as the appraiser side and doing some education and some other things of that nature with them. So that was pretty cool of them to do afterwards. So I actually respect them a lot for that.
Nice.
You had no choice. They're like, yeah, this guy's good. We got to get him back on.
This guy's quality. Also, look at these views.
Yeah,
Scap's driving views from his beautiful face there. Probably not. Speaking of beautiful face, Dan, look directly at the camera. Center yourself.
Oh, sorry.
You ready? Let's see how like it is. Oh, that's pretty good.
Oh, my glasses are right over there. I can put them on, but
yeah. That's okay. All right, Dan. Well, as we leave, why don't you tell people where they can find you?
It's right down here. D-Letterdocs, D-L-E-D-W-I-G-R-O-C-K-S. If you want to see more, I'm going to post all 50 at those. I don't know if I'll do it in one shot or multiple shots or whatever, but I'm going to post all 50. Actually, no, I'm going to change that. I'm going to post 10 good ones of mine because they're not all good.
Yeah, they're not.
AI
you should just do. Actually, you know what? You'd probably get everyone's posting the good ones. You should take the worst ones and just do a slate of terrible ones. And because you're a fan of art and artists, and you're a designer yourself, so you could say designers, you got nothing to fear. Because if you look all over the interwebs, people are like freaking out. Designers are freaking out because what AI can do, but they really have nothing to worry about when you see all the bad ones.
And art is subjective, and it always messes up fingers and puts weird words on it. But I'm going to post those, and I got a new reel I'm working on that's going to be funny. So I want you all to watch that. Share that, please. But right there, D-L-E-D-W-I-G-R-O-C-K-S. Where can they find you?
They can find me at Razorback. That's RAYZORBACK. Everywhere good Razorbacks are sold, mainly on Instagram. Find me there. Shoot me the keyword gear. See what happens. Also send me masterminds. See what happens. And I'll put you on a little list to send you masterminds and reminders and stuff like this. So thank you guys for joining us. And we'll see you guys. If not next week, we'll see you in a couple of weeks. Bye, everybody.
Thanks, dudes. Take care of one another, please.